Welcome everyone. Whew, what a trading day, right? What you see here in front of you is our Algo 17 program, and the 5-minute model, because it's rollover, you'll see that the E-mini S&P is September. Took a couple little trades today, and because of volatility, it didn't take any trades after that, but that's all right. What we had also a really interesting day in the euro currency. We're starting to see it pick up with some nice trades that are happening. That was from yesterday. Today went long, got out, went short, got out, went long, and again it trailed out of its profit target and then just avoided all of this chop and slop, which is kind of cool. Next, this is our Spider 60-minute model. I sent an email out the other day saying, hey, we got out of our long trade, and what did it do? It went right back in a new long position. And that's what reflects here on the account positioning. Shows you Spider net long, 341 shares. It tells your average price 292.64, 293.06 is closed. And then this is the VXX, the volatility. This is the program we run in the live trading room, and it initiated a new short trade. So these are the trades that we pick up. Bright blue are winners and red are losers. So back in early May, we had a couple chop and slop, but some really defined great trade setups in the volatility VXX. By the way, why is this important? Just to kind of give you an update of what's going on here at Person's Planet, number one, and also to point out what the trading models are. They're currently long S&Ps, and that's nice. Why? We'll get into that in just a second. Tomorrow, it's Thursday, we're doing a webinar. It's called the Person User Group, PUG. PUG stands for, again, Person's User Group. And you'll get a little taste as to what are the kind of indicators we've created. Not just the PMC indicator, not just the PPS indicator that you find on Thinkorswim and, again, Person's pivots, but how we put together a trailing stop function, incorporating my last conditional change concept we wrote in that book 15 years ago. And I am proud to say that I'm working diligently on that second edition. It's kind of a little late. All right, let's take a roundup and see what the markets look like. And just to be honest with you guys, this is probably one of the stronger readings in the Dow Jones Industrial Average. These are, first off, let's look at the Dow. And then let's talk about how to trade this bad boy. Now, it's not Friday. I get that. And this is a weekly chart. So if the market closes here or higher on Friday, you'll notice that generates this little PPS buy with a brand new fresh breakout in the advanced decline. This would not signify a triple top. It would signify a potential new high in the market to come still. The only thing that is left in question is the lack of follow-through volume. Now let's take a look at a daily chart, and I'll tell you what my thoughts are on this. The daily analysis, obviously it is showing, as you can see, get the on-balance volume into focus for you. We broke out to a new recent high in OBV readings, on-balance volume. This is a cumulative tally of when days are positive. It calculates and tabulates a positive move in the volume. And so when price goes up, you want to see on-balance volume move up and help to support that price trend. We have another indicator, and again, this is the daily advanced decline. And what the daily advanced decline suggests is one of the most bizarre, strongest readings I've seen in a long time in the market. Leading price. These are two leading price indicators. It definitely suggests we're getting a move to the upside. Remember, I had a bold call a week and a half ago before we left for vacation, and I said we're going to test new highs. Well, we're not just going to test new highs, we're going to take out the highs. By the way, let's look at a widely followed index, but it's on, we don't trade it. It's called the New York Stock Exchange Composite Index. Now, Sherman McClellan created a indicator called the McClellan Oscillator based on the breadth analysis derived from this stock index. And again, many traders are all following advanced decline based on this stock index. Now, here's what's really interesting. The advanced decline broke out to another new high. That's extremely positive considering this is about 1,800 stocks. I would say 63% of the stocks contained in here are interest rate sensitive, including REITs. and we'll get to that in a minute, as well as bond funds, but utility stocks, etc., etc. But it is a broad-based index, and approximately, I think, 1/5 of the stocks are foreign corporations as well. So what does this suggest? It suggests that we broke out, and 2 days in a row now we've seen positive accumulation in breadth, and that signifies that we should see at least not just a retest of this high, but one way over here. We should probably be seeing newer highs. When? That's the question. It's quadruple witching. Tomorrow's Thursday. So after the close tomorrow, we do our special PUG membership, and you are invited if you get an email. If you don't get an email, just simply contact us here at info@personsplanet.com, info@personsplanet.com, and sign up for the meeting. Or go visit the website, and I'll show you that in just a second. All right, just go to personsplanet.com, go about us, and hit contact us right there. And just fill out your information, and you're only going to get emails from me. I don't sell. I don't do affiliate marketing. I don't need to. I don't want to. I'm just putting out my information. So if you want emails from me that just give you announcements of these upcoming webinars, then fill out that contact information. No, I don't need your firstborn. I don't need your credit card. You know, it's nothing. It's email is mandatory, so we can send an email to you. Your phone number is optional, and your message right here. That's it. That's all it's entailed. All right, now let's get into the meat of what I want to present today, and it is this. Every stock index broke out with new high readings in advanced decline combined with volume trend indicators, specifically using on-balance volume. Now let's look at the Russell Small Cap Growth. Now this is a pain in the neck index, because here's the reason I define this as the pain in the neck index. Not only is it not anywhere near its September, October highs, it's not even near its May highs. So therefore, I think this is what we dubbed the condiment trade, because it should play catch up. Get it? Condiment, catch up. Sorry about that. It should play catch up, and it start to see some follow through rally. Now, here's one that I put out a specific trade recommendation on. I'll get into Thinkorswim option platform right now. And we saw this amazing resistance line in the sand. This is a gold line. It's a pivot. I went through this in prior videos. And what did we do? We closed one day. We closed another day. 2 days greater than. It doesn't guarantee. Here is another 2-day close that was positive over resistance, and it failed. The breadth was good. The volume was good. Everything was looking great except for this volume indicator. So out of the three, this indicator did not really signify strength. All right, let's move forward and go back and move to current times. This volume indicator is definitely showing positive strength. The advanced decline shows positive strength, and the on-balance volume showed a breakout. And if it's true that volume leads price, then we should start to see a more aggressive move in the Russell, and I'm suspecting we're going to get a move back into around the 158, 160 handle, right up to where the market failed or broke down from back in early May. So that's not a hard call, but here's the thing. Let's turn to Thinkorswim right now and share this with you. All right, so I've teed up, maybe we can't see it entirely, so let me squinch this into focus. So here we go. So one of the things that we're looking at is vertical spreads for tomorrow, 155, 160. We put this recommendation out for traders today and may not have caught them in time at our email alerts. But one of the things that I wanted to look at was to get in on the August one double nickel, 155, 160 bull call spread. Look at the implied volatility. No one believes this move. Look at the option statistics. So if you look at August, it gives us 58 days. We're talking a 55 slightly out of the money. It's almost in the money. It's slightly out of the money though, right? 155 with that much time. And we're paying about $2.35. So you're talking about a 157.35 handle. We need the market above 157.35. Why that spread with that much time? Let's take a look. I'm not the only one that feels compelled to be doing this. We had a pretty strong open interest of 9,000. So we have a trade today, not a big move, 55 cents. So I don't think this was an offset. I think this personally was someone initiating a new spread around 7,000, 6,000 times. And that's what I wasn't searching for unusual option activity as much as I was looking at my work suggesting we could go higher. And I always like to find a trade with volume in the direction of my indicators, because we can't always rely on unusual volume activity in the market. Why? We don't know if it's a hedge, a rollover. We can only look at an implied. But if we have better information that suggests this is a true breakout to the upside, and we can see the market move up to a certain level in a prescribed period of time, then I can go with this type of analysis. That's my explanation for you. Now, I think that's very powerful information, but more importantly, let's move up here. Excuse me, real quick. Let's take a look at option time and sales, because this is really unique. Someone right on the close or 7 minutes before the close put on a 10,000 time trade looking at a spread, 62 calls for July, 45 puts. I think someone was, I'm not going to say that you're selling the July 19th, buying the July 12th. Possibly this is what this was doing. What it signifies to me is a synthetic out of the money trade. Maybe they sold the 145s to help buy the 162. If you're directional and positive, you know, that's a pretty positive situation there. So we got started to see a buildup today for the first time on the call side in IWM. Check this out. 161 strike is 2,300 volume today with 1,900 open interest. And then on the downside, someone looked like they're trading the 140, 145. That looks like they're taking in some credit to me. So there's some pretty weird stuff going on. But Russell today did get some unusual volume activity, and I think it's more geared toward the upside. So I just wanted to bring that to your attention. All right, next, let's get into a couple other items. So we have stronger breadth, and I've been doing these videos since we got back from our financial cruise at Person's Planet with our clientele and our members, which are more like family. But nonetheless, the market, we've been doing these videos to kind of update you. What do the tools show us? And is it worth having tools? Is it worth trading? We have our thoughts and observation positions. We have a position in Tilray. You know, if you go back in time and look at these videos, I know a lot of people are like, Tilray, Person, what are you, nuts? It's a illiquid pot-growing company. There's better stocks out there. Well, you know, if you look at Tilray, I didn't say to buy it at 88, 89, 90, 55, 51, 48. We had support. We waited till we could see some indicators populate some positive price action. And we finally got it, and I wanted to share this with you because this is a tool. It's the Person's Market Catcher. It's a relative strength tool, and you're hearing more and more technicians on TV talk about relative strength, comparative relative strength. Well, this tool shows us markets in 4 stages. It's starting to outperform. It's starting to lag. It weakens and improving. So we go through different phases. It also shows us and highlights convergence patterns or bullish or positive divergence. And combined with our volume indicator, we were starting to see that convergence form in Tilray. Now, this is a daily chart. Let's zoom this up, because right now we're in this trade from a small position around 36 based on the market was breaking out above a last conditional change right in here, and that's partly the reason we got a daily buy signal. It zinged up to 46, backed off, and now we're on the uptake again. Tomorrow, Thursday, we have CGC, Canopy Growth, with our earnings. But something's going on in Tilray, and you can clearly see it was building with this convergence pattern, both in volume and in relative strength. I'm suggesting we're more likely to see the move get back into the 50, 55, and I'd say puke the trade out for, or at least a portion of the trade, and which is non-professional term for sell out or liquidate the trade for a profit. Anyway, Newmont Mining, I gave this trade out a while back. This is an options strategy. This thing could really blow off to the top for whatever reason. Volume is off the chart with on-balance volume, and it's supported by my volume indicator. All right, so despite going through some of our positions and what we see in the market, let's take a look at what I think is, and looking at that option strategy going forward in the Russell. Let's take a gander here of what is changing the landscape of the market. If today was Friday, but it's not, it's Wednesday, we have Dow Jones flipping into a PPS buy, biotech flipping into a buy, and we've been on the biotech using Labu. That's one of our positions, a 3-time leveraged ETF. So Labu is another one that we have at a lot lower prices, and we wanted to average in on this trade. I'm looking to actually get back in on bigger positioning because I believe the structure of this trade is that we are going to see a move, minimum objective, get back, because we broke this little, I guess you could say we got this little trend line going here, a trend line break. It's a trilogy setup to what I would jokingly say biblical proportions. You've probably seen the videos where I've given this update. Again, same thing with like Tilray, where we had lower lows in price and we had higher volume readings with convergence in relative strength. So this was telling us that there was positive money flow coming into the biotech sector, and that's why instead of going with IBB, we went with the 3-time leveraged ETF. Risk was at a minimum and profit potential is at a maximum. So with this identification and how I teach traders how to spot for these particular setups, and then why instead of going with XBI, which is the ETF on the biotech sector, or instead of going with IBB, there's times that you should go with the leveraged ETF. And you don't even need as much equity. You can be in smaller positions and still get the same response or percentage change in your account by being in a leveraged ETF than the underlying. Let's take a look. IBB. There we go. So it looks very similar in nature. It trades the same. You have the same setup, and we've done this before, and hopefully you've seen this on the videos to give you an alert of how to trade this thing. And what I'm looking for is a minimum objective right now. We're more than likely to test back. I'd go 111 to 115 maximum upside. First, I think we're going to try to tackle in this 111 area, and then lastly get up. So my profit target on this run up, we're getting close to it, but I think we get right back up to that zone up there, and then we hit the road unless we get amazing fresh buy signals and the relative strength continues to outperform. And by the way, that 4-phase that I was talking about, again, if it's bright blue, that's phase number 1. Dark blue means it's weakening, all right? 3, it would be red. It's completely lagging. And then 4 is we go back into an improving phase. So 1, 2, 3, 4, that's the cycle of stocks. Outperforming, going straight up, underperforming the overall market, weakening, and then again, back to improving, and the market goes into a buy mode. So that's the phases of helping to identify the PMC indicator. And for the record, how do you find that? On Thinkorswim. Let's give it to you right now. Let's go to change the IWM. Let's go to it because it works for comparing any other stock or index or sector ETF to the S&P 500, the benchmark. That's what we're all comparing in looking for stocks to outperform. Money chases money. Money managers are going with high momentum names, and they keep pouring money into those names until proven wrong. All right, so here's the Russell. Even on balance volume suggests upside here. Go over to studies. Go to add a study. Find John Person. Make sure you get John Person's name right, okay? And you go to John Person's indicators, and you got PMC. Click on it. Boy, there's your indicator right there. And as you can clearly see, we're starting to improve relative performance over the S&P 500. So that's we've got a good relative strength improvement going on right now. relative to the S&P 500 and IWM. And we also have something very special, as I pointed out. We now have a 2-day close greater than overhead resistance. So that's positive with confirmation of strengthening or improving volume. So that's how you use it on Thinkorswim. All right, let's get into two other items that I want to cover quickly. I just pointed out about the advanced decline readings with the NYSE, and the NYSE being about 63% weighted to interest rate sensitive stocks, right? Here's the problem with today's market. If we could see, and I want to see a couple things happen, I need to see improvement in the transportation sector, IYT. And on this screen, there's a couple things that you will see. This is the person's market catcher, the relative strength indicator in numeric and color coded. Bright blue means it's that, whatever that is, like in this case GDX, it's reading 1359 and the moving average is 1154. That suggests that gold index, or the gold miners sector ETF is outperforming relative to the S&Ps. So here's a quick chart lesson on what that all means. Well, there's bright blue, and then you can see the moving average is green right there. So that means that the relative strength just didn't turn positive. It's been positive for a while because the moving average is now green. So that's important. All right, that helps me to identify momentum. It's breaking out. Gold miners are breaking out newer highs. Is this a reflection of low interest rates or consumer demand and money being made in the miner sector? Money's chasing money, there's no doubt about it. So I think that this trend with that volume reading and with the relative strength still improving, or bright blue, gold's not ready to puke, or in professional terms, it's not ready to sell off yet. All right, next, I want to get into IYR, which is the Real Estate Investment Trust, because here is the Real Estate Investment Trust has been around a while. The trend has been, it's a little long in the tooth time-wise. The indicators suggest as the price, and this is a divergence situation, price is making newer highs, relative strength is weakening, and volume momentum is falling off. That's what this represents. Volume momentum is falling off. That's an interesting situation because that's a daily. That would mean if we do get a sell signal and you'd want to scan for a PPS sell signal. Now, here's another thing. Let's take a look at the weekly. And this is a very interesting, and we cover this in a lot of our seminars, and how to take these tape reading skills to a advanced level. So we right now have a higher high reading in Real Estate Investment Trust. The volume is trending up, but the momentum behind the volume is weakening. So that makes this market, when people decide to sell, it makes it vulnerable for another downside. And that's what I would be watchful for, especially, let's go up and look at this thing called VNQ. VNQ. Now, VNQ is Vanguard Real Estate ETF. And as you can see, the weekly analysis on the VNQ, market broke out to newer high, so it doesn't say sell it today. You've got to wait for a call to action. And it's not selling high, it's selling at the right time. And that's what I want to teach you, how to sell at the right time. This does not say buy. This is showing weakening relative strength. Stock market's up, this is up, but this is moving up less than, and it's moving up with literally negative volume readings on the weekly basis. So this is vulnerable for a sell-off. You want to watch scans on VNQ. It might not be this week. It could be next week. Could be 3 weeks. But you want to start watching for telltale signs of a market reversal soon. Okay? So that's number one. The next thing I wanted to bring to your attention is utilities. Now, utilities is, and I know I did this in another video, utilities is a very defensive play. The utility trend has been going on since 15. I mean, if you want to get technical about it, since 2015, utilities have gone up. I mean, from the left side of your screen to the right side of your screen, with a couple, of course, zigzags, right? So here's the thing. If the market is going to be truly bullish, I would want to start to see a sell-off or a pause or descent in the accumulation or momentum behind buying utilities. We want to see higher beta stocks. We want to see more aggressive stocks. We want to see growth stocks. We want to see the Russell, technology, semiconductors. Those sectors need to start to get a lift. We also want to see energy, oil and gas exploration, XOP. That sector, we want to start to go up. So two trades that I see as an unwind and support of longer-term equity growth. I want to see utilities down. I want to see the Vanguard, at least the VNQ down. Real estate investment trust, I want to start to see that give it up a bit. And it's capable of that sector rotation because let's just look at the obvious. XOP. Staples, utilities, and Vanguard Real Estate Investment Trust is up. And boy, XOP is down. We want to see a flip of that, and I think we will start to see that soon because I'm getting signs of a hint that we're at a pause or an impasse in the market. Divergences at the top of those other, the utilities and the Vanguard IYR, and I'm starting to see a potential bullish sign here. The relative strength, while it's not turned bright blue, or fuchsia, it's starting to show a little bit of convergence here, and that's positive. This is my volume indicator, and it hasn't flipped positive yet, but we want to be watchful of it because we're starting to see that stall. On the daily charts, guys, ladies and gentlemen, on the daily charts, we are starting to see, hasn't expressly moved in yet, but there is some volume coming into this move right now. So first and foremost, a close greater than monthly pivot. That's positive. Watch this on a day-to-day basis. I'll update you too. I thank you for watching. I hope you found interest in this. Watch the IWM. I think we got a new, at least a small breakout to the upside into the 158, 160 IWM price structure. Those August bull call spreads, they're pretty dynamic at this point. So maybe you can fiddle around and do your own options work, but definitely my old adage is if you risk half the time and half the price, you should start to see immediate results within the next week. And again, thank you all for watching. If you like the video, give a thumbs up and look at your emails. And I think you're going to love attending our Person's Planet workshop that we're giving online tomorrow for our PUG user groups. You're invited to attend. Thanks, guys. Be good.